Hi, Vincent Cyr here from the Cyr Team at Keller Williams. I want to talk to you a little today about something more on a serious nature. And it starts with the topic of mortgage forbearance. Right now, there are 4.7 million mortgages that are in forbearance. Now, these mortgages went into forbearance as part of the CARES Act that was enacted in March or April as the COVID crisis started to really spread across the United States. And in essence, what takes place is says that the lender or your servicer is going to allow you to not pay your mortgage for a certain period of time. Let's say it's for 3 months. After which, then either your fourth month mortgage payment will include your mortgage payment plus the 3 months back mortgage, or you may be made arrangements with the servicer to put that forbeared money at the back end of your loan. Those are dialogues that you had to have with your lender and how they're going to handle that. And during this forbearance time, the servicer and the lender were not allowed to go and begin foreclosure proceedings against you. This is sort of a stopgap because the economy had been shut down. The jobs were all either people got laid off, furloughed, or let go. And the hope was that once we got through the initial part of the COVID crisis, that we'd be able to ramp back up, the jobs come back up, and you'd start getting right back into the swing of making your mortgage payments. That may not be happening as what originally was thought. We see more delays in how the economy is opening. We see more delays in how jobs are coming back, if they're coming back at all. Companies are making vast changes in their workforces, and we may not see the same level of employment. So those people who were in forbearance may find themselves in a situation of which that period ends and the mortgage starts becoming due again, and they are still in the same economic situation of not being employed or just being on unemployment, and you start getting concerned about what is going to happen with you and your home. At the same time, it's probably very difficult for any of these people who have taken the mortgage forbearance to refinance, to try to take advantage of low interest rates, refinance, and get yourself positioned maybe with a lower monthly payment. Because it's difficult once you've gone to forbearance to do the refinance. So you're finding yourself now in a difficult position. You may want to think about taking advantage now of the strong prices that we have for homes, and that selling your home now, providing you have enough equity in the home to come away with something or to be able to at least pay off the mortgage, may be something you need to start considering. What took place in 2009, 2010, 2011, when we had the housing crisis, is that many people held onto their homes far longer than they should have. And as the home values start to decrease, their mortgages became underwater, they got foreclosed, and people had significant issues then with their credit and with the amount of money they owed, and walking away with really no assets or no equity that came out of the house. We're in a different position today. One, we know more, and we have a little bit of advanced knowledge, knowing that waiting is never probably the answer. Two, we are in a very strong seller's market, so that it's very possible for you to sell your home at a very good price, maybe top dollar. Take advantage of whatever proceeds you can get, pay off whatever loan you have, keep your credit history relatively intact, and get yourself positioned so that once we weather through all of this coronavirus pandemic issues, you will then be positioned without a damaged credit. Yes, you may have to go rent somewhere, or you may have to move in with somebody else in the interim. You may be able to get another home if you've got enough equity and can pay cash on the next deal. Or maybe one of the other members of your household is still working and can qualify for a smaller mortgage. What we're trying to do is have you start thinking now that this problem that we're having with the economy and jobs may be something that may be lasting longer than what we originally expected and what was originally forecast when people started taking these mortgage forbearance options. And now's the time to take advantage of the strong prices and maybe get yourself out from a potentially bad situation that may be difficult to improve as time goes on. It's not a fear thing. It's not a warning thing. I'm saying right now is that assess the situation you're in. And if you're in this situation, you need to start considering what are the different options that you may need to take in order to get yourself protected of protecting the asset that you have, finding the right place to live, protecting your future credit rating, and allow yourself to be able to come through this as, you know, less damaged as possible. So something to consider, something to think about. If you have further questions about that, reach out to us. It may not be the be all to end all for everyone, but we think it's something that people need to start considering more and more as this pandemic continues to work its way through our country and our economy. Vincent Cyr here from the Cyr Team. Check out our website and our blog for more information. Have a great day.